Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, November 14, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have a down day in our hands. The Spider was down $3.84 by the end of the day. It's about 0.6%. It's really not that big of a deal in the big scheme of things. We're going to start big and work our way down. Starting big is where we are on the charts. They just made another new high. They were well above all the moving averages. And we'll get to the weekly chart in a moment because there's something very interesting. But what we said for the last several days is as they get extended and we start talking about it over here, as they start to get ended away, once they get a little bit too far, in air quotes, they're likely to either eat some time off the clock and let the 20 or home base move up toward price, or they'll come back down toward price, or a combination of both to work off some of the unmeasurable overbought condition. What we also said was we were going to use this low here from Tuesday as a bogey, and the next bogey after that was this low here, which is in between. It's called the no man's land place. Below here, there's a gap down below. So this low is 593, and you'll notice today's low, 592.65, closing print, 593.35. That's called running a test and closing above an important place. Below this place opens the door to the gap. The gap is down at 591, and we also have a trend line situation. It's kind of one of those, but wait, there's more. Check this out. This is something we've been looking at in the live room for quite some time. You can see from a daily chart perspective, and I can tell you that these pivots are dead on balls accurate in terms of the trend line. This is not, well, it's about here. These pivots are to the number, and you can see what happened today. They came in to run a test of the trend line. Now, here's but wait, there's more. Check this out. And I want to show you from an intraday perspective, if I can get this thing off the chart. You go down to a 5-minute chart. Right of the vertical is today's activity, and you can see what happened at the trend line, but that's not it. The but wait, there's more comes now. We had a number just below the trend line, and you'll see it in the notes before the opening bell today, 9:05 a.m. Eastern Standard Time. Below 594.37 opens the door down to the trend line at 593.20, which on its own is a bounce back in the other direction place. Might not look like much on a 5-minute chart, but this bounce here at a high of 594.50 equaling about 13 S&P handles off the number. Not the trend line, the number right below the trend line. How you doing? Let's just go over the early stuff, and I'm going to circle back to the daily chart of the S&P because there's more to talk about. There's more to discuss. What happens if they fall precipitously? What happens if there's a couple of what ifs, capital I, capital F. Let's go over some numbers first. We're going to call 597.60 our bull pivot today. We'll just call it a pivot for all intents and purposes. Lasted all of about 10 minutes. 597.60 was our bull pivot. Couldn't get above. No bullishness type of behavior. A support zone today, 596.20 down to 594.75. From a scalping perspective, this is a base hit in the morning session. That's 8 S&P handles. Here's more when they came back into the zone. We called it a play it again, Sam. What's a play it again, Sam? This was in real time in the live trading room. A play it again, Sam is when we take another trade in the same support zone or resistance zone based on certain market conditions. We had a nice discussion about this in the live room today. Why was today a play it again Sam versus some other days? We had a play it again Sam on a spike the low and rip it back up in the other direction. So that was trade number 2. And then trade number number 3 was here at 594.75 in the afternoon, and trade number 4, if you wanted it, if you were hanging around that long, 593.20. Here's what we actually had today in the live room. We had to spike the low and rip it back up in the other direction, and I drew a box like this right here. This is where it was, and I said, if she comes into that box, that's a bounce back in the other direction zone. Could be 595.50, 59, 56 on the top end of the box. Somewhere in there, she went halfway into the box and ripped it back up in the other direction. That was the second trade of the day. We were 2 for 2 in spider trades, long trades yesterday, and 2 for 2 right out of the gate today in spider long trades. Again, but wait, there's more. We had a Disney trade, a short trade in Disney. 113.04 and 114.80 were 2 numbers. High of day, 114.81. Again, how you doing? And then they just dripped lower all day long, finishing down around 109. Nice trade. Pause the video, read the notes, go back to the chart and double check the work. It's all in here. The same numbers we just went over, the same trades we just went over. As an example, 950, and there's your bounce back from within the zone. It's all in here each and every day. Everything you need from a numbers perspective and a commentaries perspective to trade in the S&P. And oh, by the way, not to mention the laundry list of markets. We cover about a dozen markets here. Bitcoin, spiders, Qs, IWM, SMH, which is the bond market, GDX, gold miners, crude oil. We had a whopper in crude oil yesterday. Gold, silver, natural gas, the dollar. There's value here. Pause the video, write down the numbers, and go back to your charts to double check the work. Stocks on the move. This is where Disney was found, so it wasn't just a live room trade. It was for inside the numbers and live room members. Everything you see here is for inside the number members. All the commentary throughout the morning session of the S&P, pre-market commentary, stocks on the move, a dozen markets, including Bitcoin and all this other stuff. This is good stuff. That's why the price is going up. This is good stuff. Value. If you're too lazy to mark up your charts, I'll do it for you in the IWM. These are the numbers that were on the board. 235.95, 233.75, 231.25. Funny how that works. So do the numbers. How about SMH? How about 248.30 on the board, bright and early, long before the market's even considering opening for business? What happens if the spider breaks the trend line? Well, we got a couple of things going on. Let's understand our places, our numbers, and our reasons why. Let's say she gets below the trend line, gets below the 593 here, and goes and fills the gap. The gap is at 591.04. Can she dip below the trend line, fill the gap, and bounce right back up over? Absolutely. Getting closer, ER in parentheses, to home base or the 20-period moving average is fine to work off some of the overbought condition, fill a gap, take care of some unfinished business. That's normal garden variety stuff. What happens if they go even lower than that? The what if scenario. Always be prepared for the what if. We have to not only be the umpire calling balls and strikes, but we need to be the prepared people. Now, the next thing down would be the most recent breakout area, which on the day they broke out, they basically ran a test of and took off. That's not a true test, meaning days and days later after they went a lot higher. So here they come. If they come down and they're below the gap, the next major place will be 586.12, the most recent breakout area. Happens to be just above, and depending on when price might get there in italics, the 20-period moving average could be a little bit higher, and it may coincide with 586.12, the most recent breakout area, 20-period moving average. 3 guys tell you you're drunk, go sit down. That's the kind of place you're looking for a bounce back in the other direction, unless they eat too much time off the clock, hovering above, creeping into it. Get down there in some kind of hurry formation between now and let's say 3 or 4 days from now, 2 or 3 days from now, that's a bounce back in the other direction type of situation. Write that down, put it on a sticky note. What's going on over in Camp IWM? Well, they got below this low. That's a negative sign. This is the gap up low. Now they're in no man's land. Most recent breakout area, 227, moving averages, and then you have a gap down here at 224 and change. Still above all the moving averages. Trend is your friend. By the way, speaking of above all the moving averages, weekly chart was getting extended, pulling back. We had an on-time situation. Remember, we talked about this in the spiders. I think it was last week and then early this week. On-time type of situation. This is a week for a potential turn. Just saying. It's also regular way options expiration tomorrow, the 15th, Friday. Most people don't know this, but technically options expire on the weekend. Not actually on Friday. Why does that occur? Have no idea. Just want to notice this before we move away from the spiders, even though I already moved away and came back to it. She did close the day below that trend line. I think that's a piece of information that traders should know. Write it down. Put it on a sticky note. What happens when markets get too far extended from home base? They like to come back toward home base. Where have you heard that before? For how long have you heard that? What's happening now? These markets are coming back toward home base. Nothing more, nothing less. That's what happens when markets get a little bit short-term overcooked, as they say in the trading parlance. Favorite market leading indicator today, down 1.35%. Again, of note, puzzle piece on the table. What about the folks down at the transportation department? Not down as much, but down nonetheless. Right on par with the spiders, about 0.6%. They're eating time off the clock, still a little bit extended from home base. Don't be surprised to see some kind of a drop forthcoming in team transports over the next several days. Anything different to report in the Q, people? Absolutely not. Down about 6 or 0.7%. Again, got extended from home base. Sounds like a broken record, but it's all the same market at times. No man's land. There's a gap down here. If she gets below 508.34, what'd she test today? 507.77 low. Closing print, 508.69. Did the same exact thing as the spiders. Tested that low candle, the low of the breakup candle, and bounce back to close above it today. Doesn't mean she won't be below it tomorrow, but closed above it today, stay below intraday, get below again, and the door opens for the gap down here. The gap closing print is 505.58. Close the gap or get below the gap, and then the next scene shows the door opens for, yes, home base or the 20-period moving average. XLF down 13 cents. Not going to make a federal case out of it. Going sideways around the highs, letting home base creep up to price. Sideways is, in fact, a corrective pattern. We're not going to make a federal case out of down 0.25%. There's no material change on the chart. What about the semi-space? Smash mouth. Wouldn't you know it? They finished the day up 55 cents, bucking the trend. Everything's down, everything's down, everything's down. And what happens? Smash mouth finishes up 55 cents, ruining the story that it's a canary in the coal mine. Weekly trend is still up. We talked about this last night. And one more time, above this place here on close. And guess what you get? You get a rocket right up to about 275. No material change today in SMH. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.